Hi everyone, thanks for joining the equity report presentation for Kellogg's. I'm Sri Kadiyala and I'm going to edit my equity report on Kellogg's, and the ticker symbol for Kellogg's is K. The stock value on the date which I did the report was $63.95, and as of today the stock value of Kellogg's is $63.67. Its targeted price is $66, and I would recommend this stock to buy. Well, coming to the executive summary, some of the highlights are like it's a leading American breakfast manufacturer. Although a century passed from its establishment, the product portfolio has been expanded more beyond the breakfast, and they never lost the insight of the principles that was placed by the founder. It remained as a committed breakfast provider for many lives and our worldwide customers through delicious and nutritious breakfast, and also taking the actions for further growth by overcoming its competitors. Kellogg's products are manufactured in 18 countries and marketed over 180 countries. Kellogg's largest factory is located at Trafford Park in Manchester, United Kingdom, and it is also the European headquarters. Kellogg's, it's really famous even in European countries. It holds a royal warrant from Queen Elizabeth II and the Prince of Wales. Kellogg's was founded as the Battle Creek Toasted Cornflake Company when it in 1906. It is incorporated in Delaware in 1922. Uh, it is headquartered in Battle Creek, Michigan. The Kellogg Company, they are driven to enrich and delight the world through foods and brands that matter. Although a century passed from its establishment, the product portfolio has never expanded more beyond breakfast, and they never lost insight of the principles that was blazed by the founder. W.K. Kellogg has given them a rich legacy of integrity, and honoring that legacy has been a significant part of Kellogg Company's success. Well, coming to the industry overview, with its ironic location in Battle Creek, Michigan, Kellogg Company is a constant battle for number one spot in the U.S. cereal market. It has a main rivalry with the General Mills, and the next rival for Kellogg's is Nestle. It ranked 198 in Fortune 500 magazine and 492 in FT Global 500 and 198 in Fortune 1000 in June 2014. Uh, Next, coming to the SWOT analysis of Kellogg's, main strengths of Kellogg's are real estate, financial leverage, economies of scale, and technology. Well, coming to the real estate, its location matters for its real estate. Its location is the long-term positive impact. And this location leads to a decrease in the cost. As a result, it increases the profits. Coming to financial leverage, Kellogg's uses their balance sheet for expanding their business and increasing the profits. Financial leverage is a long-term impact, and it increases the profits and decreases the costs. Economies of scale. Economies of scale are the cost advantages of a company. It has a significant value, and the analyst must put the significant importance on economies of scale. It is a difficult qualitative factor to defend, and the computers have an easy computers have can easily overcome this. Uh, Technology. It has a major impact. Technologies have a long-term positive impact, which adds value to the company. So the competing institutes have a tough time to overcome it. Weaknesses. Basically, Kellogg's has a four weaknesses. That is outdated technology, weak research and development, weak supply chain, weak management. Coming to outdated technology use and the lack of payment patents, it hurts the company a lot. Uh, this brings on a lot more advantages for its rivals. It has a short-term negative impact, and it leads to a decrease in profits. And to overcome this issue, a lot of investment is required. Weak R&D shows slows Kellogg's and increase the growth of its competitors. Weak R&D have a long-term negative impact on the company. Weak R&D is an important qualitative factor, and a lot of investment and time must be spent to overcome the issue. A weak supply chain delays the arrival of products to customers. Unnecessary delays can hurt the company over the long run because customers will cancel the orders. Weak management reduces the profits of the company, and it also increases the business risks. Well, coming to the opportunities of Kellogg's, they have two opportunities: fragmented market and financial market. Fragmented markets provide many opportunities for Kellogg's to expand and increase its market share. Fragmented markets have many small competitors who lack the cost advantages of smaller companies. The online market offers the Kellogg company the ability to greatly expand their business. Coming to the threats of the company, it's facing a bad economy. It has a volatile currencies threat, and it also faces a threat from international competition. A bad economy hurts the Kellogg company by decreasing the number of customers to a great extent. It makes the volatile currencies makes the investments more difficult. It has a long-term negative impact which reduces the profits. International competitors are the biggest threat for Kellogg's. The companies which have overcome the weaknesses of Kellogg's can survive in this competitive world. General Mills is the biggest competitor for Kellogg's. Uh, Porter's five forces. The bargaining power of suppliers is low. Like a diverse distribution channel, the more diverse distribution implies the less bargaining power. Volume is critical to suppliers. When suppliers are more, the bargaining power is less. Bargaining power of the customers. The bargaining power of the customers have the ability to reduce the prices of the products if the prices are high. So it has a high, it can make highly change. A threat for the substitutes. Uh, Threat of substitutes is high for Kellogg company. A substitute is a lower quality good. If the quality of the substitute is low, then the customers will not switch from Kellogg's. And the limited number of substitutes. If there are limited number of substitutes, then customer finds it difficult to find the other products as a substitutes. Threat of new competitors. It's very low. The competition in this breakfast market is between three companies like Kellogg's, GM, General Mills, and Nestle. These three has a strong brand names. Strong brand names are very important. If a strong brands are critical to compete, then the new brands must improve their brand value. And also the entry barriers are high. When barriers are high, it is difficult for new competitors to enter the market. Intensity of existing rivalry, as I already told you, Kellogg's has two more rivals. General Mills is the first one, next Nestle. Fast industry growth. When the industries are growing revenue quickly, they are less likely to compete because the total industry size is also growing. Coming to the management tree of Kellogg's, Mr. John A. Bryant, he's the chairman, CEO, and also the chairman of the executive committee. Next on the list, Mr. Ronald L. Dissinger, he is the chief Financial Officer and Senior Vice President of Kellogg's. Mr. Gary H. Pilnick. He's the Senior Vice President of Corporate Development and General Secretary, and he's also a Secretary for General Counsel. Mr. Paul T. Norman. He's the Chief Growth Officer and Senior Vice President. Mr. Alistair D. Hurst. He's a Senior Vice President of Global Supply Chain. Well, next, coming to the shareholders, the majority of share is with the Kellogg WK Foundation Trust. It holds 70,974,190 shares. Next in the list will be Gern G. Jackery. Next, with Brian John A. He holds a 210,433 shares. Next, Janice James M. He holds 100,106 shares. Next comes Gun Gordon. He holds a 25,652 shares. Coming to short-term solvency ratio. First, it's current ratio. Current ratio is a ratio of current assets and current liabilities. For Kellogg's, it is 0.77. A current ratio of 0.77 for Kellogg's company shows that the Kellogg's has a current liabilities covered 0.77 times less. We expect to see a current ratio of at least 1, but this is not even 1. It indicates that it's an unhealthy firm. A quick ratio of 0.47 shows that the Kellogg has a current liabilities that are covered 0.47 times less. Even disregarding the inventory, which is often the least liquid current asset. A cash ratio of 0.29 for Kellogg shows that the Kellogg could pay off 29% of its liabilities in cash. Coming to long-term solvency ratio, the first one is a total debt ratio. Kellogg's has a total debt ratio of 0.81, which shows that the Kellogg uses 81% debt. Kellogg has a $0.81 debt in every $1 in assets. That is 81 cents for every $1. Therefore, there is a $0.19, that is 19 cents in equity for every 81 cents in debt. The debt equity ratio for Kellogg is 2.78. The equity multiplier for Kellogg's is 5.31. The fact that the equity multiplier is 1 plus the debt equity ratio is not a coincidence. The times interest earned is equal to 4.9, and the cash coverage ratio is 4.9 times. Well, coming to asset utilization ratio or turnover ratio, an inventory turnover ratio of 7.4 for Kellogg's shows that Kellogg sold off or turned over. The entire inventory is 7.4 times. As long as the Kellogg's company is not running out of stock and thereby foregoing sales, the higher this ratio is, the more efficiently Kellogg is managing the inventory. A day sales in inventory ratio is 49.3 for Kellogg's company, shows that it has an inventory 49.3 days on an average before it is sold. In other words, it takes 49.3 days to work off Kellogg's current inventory. A receivables turnover ratio of 11.42 for Kellogg shows that it collected outstanding credit accounts, the money 1.142 times during the year. A day sales in receivables ratio of 31.96 for Kellogg shows that Kellogg collects their credit sales in 31.96 days. A total asset turnover ratio of 0.96 for Kellogg shows that for every dollar in assets, Kellogg generates $0.96, that is 96 cents in sales. A capital intensity ratio of 1.04 for Kellogg shows that it takes Kellogg $1.04 in assets to create $1 in sales. Well, coming to the profitability ratios, a profit margin of 44% for Kellogg's shows that the Kellogg generates 44 cents in profit for every dollar in sales. A high profit margin is desirable. A return on assets ratio of 4% for Kellogg's shows that the Kellogg's generates 4 cents in profit for every dollar in assets. Kellogg's return on assets ratio of 4%. A return on equity ratio of 22% for Kellogg's shows that it generates 22 cents in profit for every dollar in equity. Coming to market value ratios, a price earning ratio of 36.95 times for Kellogg shows that the Kellogg shares sell for 36.95 times the earnings, or Kellogg shares carry a price earnings multiple of 36.95. A market to book value of 8.13 for Kellogg shows that the Kellogg's worth in the market is 8.13 times its worth on paper. Well, coming to the time series analysis of Kellogg's rate on equity, the table show that the components of ROE for the Kellogg company over the last 3 years. By closely looking at the data, it can be concluded that the change in ROE over the last 3 years has been predominantly driven by the change in leverage. All of the other components of ROE remain relatively constant. And I finally conclude like my recommendation is to buy Kellogg's because it has a strong basics, like a strong ethics that was put on by the founder. Uh, until now, it has faced a lot of competition, but it overcame that competition. So I recommend Kellogg's to buy. The data I got is from the annual report uh, of Kellogg's on December 31st, 2014. Thank you.